Good morning, everyone. Thank you so much. I'm so honored to be here with you. Thank you so much for the opportunity. And also, welcome to the Bumble of the rideshare industry. My name is Kimberly Evans, and I am the founder and CEO of Just Her Rideshare. There is a huge safety issue for women in the rideshare industry. Over the last several years, there have been over 10,000 reported assaults against women within the top rideshare companies, in particular Uber and Lyft, resulting in verbal, physical, sexual abuse, and even murder. In fact, the House just passed Sammy's Law. Samantha Josephson was a student at the University of South Carolina who jumped into what she thought was her Uber vehicle, was kidnapped and brutally murdered. It is one of the things that drives the passion that I have to do what I do. Research does show that most female drivers and riders said that they felt uncomfortable transporting and riding with men that they did not know. And I believe that every woman should be able to choose who they want to transport them. So the solution was simple. Just Her Rideshare, we would create a community of women taking care of women, provide a safe alternative rideshare, employ women drivers for women riders, also give them a safe place to work. Women do make up of less than 25% of all rideshare drivers, but they are the majority riders. Many people depend on ride sharing services, and there is an untapped market of women who are willing to become drivers but are just too afraid. So we're going to do what these companies have failed to do in many situations, which is an extensive, comprehensive background check to ensure that every driver is vetted. And due to COVID, of course, we're going to take extra precautions to ensure that the driver and the rider are safe. So we do share the market with some heavy hitters. Of course, Uber owns 65% of the market, Lyft 20%. So we see potentially there's a 15% of the market for us to carve out our niche. We do like to compare our company to a company out of Boston called Safer. They did some really great things in their startup as a women only. They acquired 6,000 drivers, was able to do 7 million in sales in the first year. And so they have solidified themselves in the industry and they continue to maintain a presence there. Our business model will be our drivers and riders peer to peer. Our channels will be our social and digital media, and of course, some data analytics. Our revenue stream will come predominantly through our rideshare usage fees, but we'll also have an opportunity to offer some corporate and individual subscriptions, some business advertising, and of course, we will pivot to deliveries as well. The industry does have staying power, although COVID, last year about 453 million people used the services. It was projected pre-COVID to be about 539. But of course, we know that the industry has been hit hard due to social distancing. We do know who our demographic is, that age 25 to 34. We also know the psychographics behind this market. And we believe that post-COVID, the same market will be more apt to take a ride share with one person, one driver versus public transportation with many people due to social distancing. To go to market, we will need our MVP mobile app. We will need our website, our commercial insurance. We will need marketing and brand awareness and driver acquisition. Our strategy, of course, will be to offer incentives to early signups for drivers. We'll build great partnerships with them to prevent minimal turnover rate, and we'll expand into other markets in about 12 to 24 months or sooner. Based on our 12-month marketing cost, our customer acquisition could run us somewhere between $25 and $50. Our product has moved from design to development. It is intuitive and seamless and user-friendly, so we're excited about the deliverables so far. Our value, we believe, will be women drivers for women riders. We'll have competitive rates for income and also the extra safety precautions that we're going to implement. So we're in the process of bringing our COO and CMO on. These are positions that we have been able to negotiate sweat equity deals. So we're really excited about the candidates that we have and excited to bring them on board. Our advisory and leadership board is power packed with business and expertise and industry of legal and technology and logistics. And I'm so honored that they would agree to help advise and manage the company into success. So far in second quarter, we were able to raise 25,000. Of course, our milestones will be to start our alpha testing, to continue building our executive team, to focus on some community initiatives, and to focus also on a soft launch around fourth quarter, depending on COVID. We do show a small conservative profit in year one, a little over 600,000. This comes from 188 drivers completing 5 rides per driver per day at an average cost of about $15, with a very slow MGR at about 4%. We're seeking 300,000 for 3.5% equity stake in the company. Of course, the funds will be used for product development, for insurance, for customer acquisition costs, and operational costs. And here's just a little look at what the app looks like to this point.
Awesome. Thank you so much, Kim. We'll do our little virtual applause there and go back to Steve and Dr. Shante for any questions and feedback.
Yeah, so that was good, Kim. Thank you for that. I have several questions, as always, but my first question really is going to center around 2 things. You gave some quick financials towards the end there at $15 average ride. How did you arrive at that price? And then also, I saw that you said that you had a small profit at the beginning. What a lot of rideshare companies aren't really profitable and haven't been profitable. What's the driving force behind your profitability early on?
So what we did, Dr. Shante, we looked at the amount of Uber drivers in Charlotte, which was about 7,500, and we took a very small percentage of that, being that women only make up of a certain percentage. And so we determined that 188 drivers for us to acquire in the entire year was able to generate that profit for us. Now, of course, it is a small profit, and of course, we will pay to grow our company, so we'll reinvest that back. But that's only with 188 drivers at 5 drivers per ride per day, drivers per day, at an average of $15. And how we got to that was we took Uber's high end and Lyft's low end, and we did an average in between.
Great. Sorry, one other question as it relates to drivers. So I know a lot of drivers are toggling between apps. Are you going to require some exclusivity on your app so that you have more availability for your driver, or the drivers are available and people don't have to wait as long? Or how do you plan to contend with, recruiting drivers that primarily drive for you?
So what we're going to do is, of course, we want to build great partnerships with our drivers, but most of the drivers for rideshare companies do drive for multiple companies. And so what we're going to do is make sure that we can offer competitive rates, competitive opportunities for them so that they will stay with us. And of course, we'll offer incentives to help them become a part of the company so that they feel like that they can actually grow with the company, that they don't have to skip around everywhere. But most of them do drive for multiple companies.
Hey there, Steve.
Hey.
Hey.
Hi, Steve.
Hey. Good presentation. Dr. Shante, you okay if I sneak in a few things?
Yes.
Okay. I think good content. Just on the technicals of the presentation, a couple notes. One, given the space that you're in, I might like to have had a little bit of, I know it's a short window here, but a little bit more depth on the competition, just because you're up against just, gigantic players in the marketplace. And so giving the potential investor some assurance that there is a place for you to fit in this marketplace, I think is really important. So maybe a little bit more on the competition side. And I think, on the team side, you mentioned a couple of key people that you're bringing in, always, early stage, especially when you're talking $300,000 in raise. Those generally are angels. Angels are pretty emotional and committed to teams and people. So maybe more about those people, why those people, you've been lucky to get them, what's their background, and why are they the right team to help drive the business. So the rest of the presentation I thought was the right content and fantastic. I do have a couple of just kind of business questions. So I think this is an interesting space. I don't know how you protect it over time, because in the software world that I come from, I can imagine that asking for a gender-specific driver is a feature in an Uber or Lyft that could easily be accomplished. And so I'd like to hear you respond a little bit to, if you were able to get some momentum, how you defend yourself against the potential of that. And then the other big thing in this space that's interesting to me that I've never quite understood, that maybe you can explain a little bit, is just, I think there's, Dr. Shante mentioned, how are you going to make profit? And there's a lot of pressure in the marketplace. The cost of customer acquisition is so high, I think it makes it difficult to profit. So there's that aspect. But I also think there's kind of this unknown potential cost looming in the labor marketplace based on whether it's municipal or state labor laws, and who determines that these are employees with benefits and not, and what's fair wage. And so I'd like to hear you comment just a little bit on what you believe to be the North Carolina, since that's where you're starting, landscape in terms of labor laws that applies to where things are headed for your drivers.
So both of those are great questions. The challenge that I have with the preventative question, Uber and Lyft have been in the industry for several years as it relates to gender specific. So first of all, it's not their business model, which means it's not a priority for them. They have gained so much of the marketplace that there's no need for real competition in this area, for one. So building a niche market out in this, to say Uber comes on and say, well, hey, we can do this. First of all, it would be admitting that there is a real issue, which there is a real issue in their brand. I don't think they're willing to take that chance. Also, because it would be, I think, detrimental to their brand based on the culture that they've already created behind the sexual assaults and the lawsuits and everything. So I think that they will market that we're going to be safe and do safe, but I don't think that there's any real change in their future. As far as the second point and the laws, one of the biggest parts of what we do is the threat part of our SWOT analysis, of course, which is government regulated things. We have to contend with the gig laws and things like that. And so those are things that are foreseeable future that we cannot control to this point. But I feel confident that our team will be able to sustain those challenges. Of course, we will have to comply with whatever the laws are, but I think that there is a real opportunity for us to gain traction in this area and sustain those challenges as they come.
So just a quick follow on, if I can. So I appreciate that. So I wonder if, and so I'd just like to hear you maybe wonder out loud with me. I wonder if the labor marketplace does present an unusual cost over time that impacts gross margin, given the customer base that you want to serve and the reasons for which you want to serve them. Is there a premium in your pricing potentially? Do you believe that maybe some of those costs could be offset because people will pay more for your service?
I do. I absolutely do. Just based on the polls, we polled about 100 women, just had some comfortable conversation about the industry, what they thought about it, how they felt about the industry as a whole. 9 out of 10 women told us not only the safety issue, but the fact that they would be willing to pay for the convenience of comfort and having that. So we do see that there is a premium that we can add. We also are building a network of community of women. And so there are other opportunities for us to launch out and offset some of those challenges through delivery, through partnering with communities as it relates to Safe Alliance and domestic violence and all of these organizations that we feel will be able to generate income for the company. We also are working on a potential IP for our second phase of design, which would also be very lucrative for the company if we could get that implemented. And so we've got some really great ideas, but your questions are absolutely legitimate, and we will be prepared to sustain those challenges as they come.
Great, thank you.
You're welcome.
And just one other question. Steve, rightfully so, I act as an angel and private investor all the time, so I do like to hear people's stories. And you told us about Sammy's Law, but what pulled you into this industry, into the field, into, were you a driver, or did you feel unsafe, or how did you get into this passion, this project?
So actually, that's a great question, Dr. Shante, and it's a part of something that I share with other women. It's my story, my journey. I was actually introduced to this by a former business partner, the idea. Because of my big business acumen and background, I was able to take the company and to grow the company. And at a certain portion, she decided that she didn't want to move forward. But once I started, I saw such great vision in it, not only as profit, but also as mission because I am a social entrepreneur. And so I saw an opportunity to continue going. And after through much prayer and counsel and legal, I got the green light to go ahead and push forward. This was in my wheelhouse as a business owner. This was an area that I was eager to learn and grow. And I did a year of research and brought in people who could counsel and share the industry with me. But that's how this was birthed.
Awesome. Thank you.
All right, we've got the big stop sign from Laura there, so I think we're good on time. Thank you, Kim, so much.